Sir, in cash flow statement, there are a couple of questions, small ones though. Just quickly finish it off. Please go to 14th question. Very cheap. Finish it off. Page number 27. During the financial year 2019-20, Akola Limited have paid various taxes and reproduced the below mentioned records for your perusal. So, capital gain tax of 20 crores on sale of office premises at a sale consideration of 100 crores. That means they sold a building, they got 100 crores. E process flow, they also paid tax of 20 crores. Now, 100 crores is there. This is cash flow from investing activity. E capital gain tax is related to this activity, therefore this also will be a investing activity. Continue. Income tax of rupees 3 crores on business profits amounting to 30 crores. So 30 crores brackets is telling entire business profit is cash profit. That means 30 crores whatever profit they gave you, in that again depreciation, working capital adjustments and all are not there. Straight away cash profit it seems. So on that 30 crores you are supposed to pay 3 crores income tax. So since it is operating activity 30 crores, tax also will be treated as a operating activity. Continue further. Dividend distribution tax of 2 crore on payment of dividend amounting to rupees 20 crores to its shareholders. So, dividend paid is 20 crores, which is a financing activity. On that, DDT also will become a financing activity. Income tax refund of rupees 1.5 crores. Brackets row, refund on taxes paid in earlier periods for business profits. So, this is very clearly a operating activity. Question is, you need to determine the net cash flow from operating, investing and financing activities of Akola Limited as per the relevant IND AS. Now what is there, sir? Look at investing activity, or look at operating activities at start. How much is the operating profit he gave you? 30. Income tax is 3. 30 minus 3, 27. Plus there is 1.5 also. 27 plus 1.5 total it is 28.5. So that is your answer here. Next, coming to investing activity, sale consideration is 100 crores, that is an inflow. Capital gain tax 20 crores you are paying, 100 minus 20, 80. Financing activity low, 20 dividend paid, the outflow already. 2 crores dividend distribution tax also is a outflow only under financing activity. Overall outflow is 22. Some recently added, but there is nothing very great in this. See, like this, taxes under different heads you will group if you are able to link the tax to the related item. If you are unable to link, you can group this royally under operating activities. Standard has permitted that. So this is one question. Another question actually, that one more small question was there. Go to question number 18. Yeah. It's already covered, sir, but study material they added officially again, so go through it once. Do this one and we'll close the standard. Z Limited has no foreign currency cash flow for the year 2001. It holds some deposit in a bank in USA. The foreign currency bank account you are having. The balances on 31st December 2001 and 31st December 2002 were $1 lakh and $1 lakh 2000 respectively. Last year deposit balance is 1 lakh, now deposit balance is 1 lakh 2000. So, apparently you must understand from 1 lakh to 1 lakh 2000 it increased means in deposit account that should be nothing but the interest that is credited to your deposit, sir. It's very apparently there. Anyway, the exchange rate on 31st December 2001 is 45 and the last year ending, and the same on 31st December 2002, the current year ending, it is 50. So dollar rate improved. The increase in the balance was on account of interest credited on 31st December 2002. Increase in the balance at 2000 gun she is talking. Thus, the deposit was reported at 45 lakhs in the balance sheet on 31st December 2001 at the last year balance sheet, and it was reported at 51 lakh rupees in the balance sheet on 31st December 2002. Why 51 lakhs? $1 lakh $2,000 into 50. That will give you exactly 51 lakhs. Last year it was $1 lakh into 45 lakhs. How these transactions should be presented in the cash flow for the year ended 31st December 2002 as per IND AS 7. Anyway, now you observe here. In this, if you apparently see from 45 lakhs, your balance went up to 51 lakhs. Correct, sir? Last year bank balance was, sorry, deposit balance was 45. Current year it became 51. So how much gap is there? 7 lakhs. Now, tell me, is 7 lakhs, is it 6 lakhs? I'm sorry, 6 lakhs. Sir, is 6 lakhs, is it completely exchange gain? Or in this some amount of interest income is also there? Interest income also is there. Interest income normally will be accounted, sir. There is no problem for that. You can see $2,000. When will you receive $2,000? Year middle you will receive. Year end lo receive. Interest అనేది end కోసం, sir. So year end కి exchange rate is how much? 50 rupees. So out of this total 45 to 51 total increase is 6 lakhs. In this, interest income is $2,000 received at the end of the current year, which is rupees 50 per dollar, which will make it to 1 lakh rupees. And the remaining 5 lakhs is your exchange gain. Now, exchange gain where you would have credited? Exchange gain where you would have credited? You would have obviously credited it to your P&L account. But is it realized or unrealized? Unrealized. Earlier session we have discussed a similar question, is unrealized. Since it is unrealized, what we have to do? We have to minus it. However, in order to reconcile the opening balance of cash and cash equivalents with the closing balance, the exchange differences 5 lakhs should be added to the opening balance in the note to cash flow statement. Did we not do this? We have done this already. Same type of sum we have solved with the different numbers. Okay, literally same thing. The only thing little debatable in this is a deposit which he held for a period of 1 year on which interest also came. The cash equivalent ani, what is the guarantee? We do not know. Because a deposit last year also was there, now also it is there. If it is normal savings bank deposit, then there is no problem, sir. Anytime you can withdraw, it is as good as cash equivalent. In the absence of any other information, you have to assume that only. But companies and all, they don't have savings bank account, they have current accounts. And if it is a current account, you don't get interest. But in this case, you are getting interest. So it cannot be current account. Companies will not open savings bank accounts. So it should be a fixed deposit. If it is a fixed deposit, it is not a cash equivalent. So point of view, if you see, there are some ambiguities in this sum. But is some ICA sums are what to do. That's why I kept this sum towards the end. Similar model I covered. Answer same, but framing lo little ambiguity is there. They should have framed it a little better actually. Anyway, we can't do anything for that. So that is about your IND AS 7, guys. 1 second. Yeah, this is done, sir.